guys, what's up? Welcome to my next episode, my podcast. I'm here with Kevin, my producer. This is Sunny Fonseca with Mortgages with Sunny. Kevin, what's going on?
Hey, Sunny.
What's on and popping?
Not much.
So today we're here to talk about FHA misconceptions. A lot of realtors that I do speak with sometimes have a misconception of FHA loans. So I'm here to kind of clarify on that, how FHA loans work. And Kevin here is going to ask a few questions that he may have. Talk to me.
So last week was with Rachel.
Yes.
You guys spoke about FHA, conventional loans. And so I wanted to kind of go over this week with you a little bit about maybe some misconceptions that people may have as they go into the process of home buying, and maybe they're getting an FHA loan and need to know, certain things. So the first question that I think is one of the more common misconceptions with FHAs would be, is there a delay in closing with the FHA?
So a lot of realtors that I speak to, when they receive a pre-approval and has an FHA, pre-approved client as an FHA, they have a misconception that FHA requires so much more. There's always a delay and things like that. I'm here to justify the fact that that's not the case. FHA loans they are a bit more restricted as far as what's needed on the property. You can't have any mold, or you can't have a roof tearing down, things like that. Now, 90% of the United States is on an FHA loan, so it's not about, because it could be just a debt to income ratio factor. On the last episode that we did speak about, FHA does allow you to qualify for a higher purchase price. Some people just might be kind of tight on their income versus their debt. So FHA might be a better option for them. Now, with that being said, FHA also has decreased their monthly mortgage insurance percentile. So that gives them more of a leverage to qualify for an FHA loan if their income and debt is kind of tight. That doesn't necessarily mean it's going to delay a loan process or it's going to cause any issues during the loan process. Now, if you have the right loan officer to gather all that and fully pre-approve that client once they do get their income documents, then you shouldn't have a problem. So, for example, myself, I fully pre-approve a client before I send out the letter. Let me see your income. Let me see your W-2s, so that we don't have a delay in the loan process.
Right.
So there's a whole misconception like, closing takes longer, or the appraisal might come in a little bit more aggressive on that. That's not the case. Okay.
So as long as you're transparent in the beginning and upfront in the start, then that should make things run smoothly at the end. Absolutely.
Yeah. There isn't a delay at all. We've been able to close FHA loans within 20 days or 15 days. But as long as a loan officer has done their due diligence on the pre-approval, you should be fine.
Yeah, I would imagine if that was something that 90% of people wouldn't be on FHA if closings were delayed every time you went with an FHA.
Thank you for that point. It's true.
Yeah. I know you brought up the debt to income guidelines for FHA. What would those be?
So typically, if you have a decent credit score, you can get away with a 54 percentile on an FHA loan. Okay. Now, sometimes it may require some assets, or it may require just a decent credit score. And I mean decent as far as like 620 or above or something like that. The maximum debt to income ratio you can have is a 54. Now, other things may apply. Mm-hmm. Now, if FHA just came out with the guidelines where, hey guys, so I'm going to go ahead and tighten the threshold for the debt to income ratio, but we're going to lower the mortgage insurance on that. So sometimes if you exceed 45% of the debt to income ratio, your rate might be a little bit higher, but 9 out of 10 times, if you're pretty decent, you have assets, you have decent income coming in, you can go up to a 54%. of your income versus your debt.
Got it. Okay. And you also mentioned a change in the mortgage insurance. I'm sorry, for FHA.
Yeah.
What?
So before it was 0.85% of the loan amount was your monthly mortgage insurance. Now FHA just came out with a guideline where it's 0.55% of the loan amount. So that gives you the leverage to qualify to lower your debt to income ratio. Yeah. So that helps out. So your monthly payment's not as high. You know, you still can qualify if needed to. So that helps out a lot for a lot of buyers.
Yeah, and it doesn't sound like a big amount, but that's a significant amount when you're talking about homes that are $500,000, $600,000, $700,000 homes. Even a 0.2% decrease, can help.
That's like a 30% difference on a monthly payment.
Right.
You know, so that helps out. That helps out people to qualify more.
Right. Now, appraisals for the FHA, you also mentioned that how an appraisal can maybe come in higher or come in lower when they go through it. Does that have any effect on closing the FHA?
Yeah, great question. So a lot of clients that I have, they say, well, I don't want to go FHA because the appraisal might come in lower than what the listing price is. That's not the case. Appraisals are always based on the value of the homes in the area. So if anything that has sold with 3 to 6 months, that's what the appraisal is based on, right? It doesn't mean that, because this person's FHA, that the appraisal is going to come in lower. No. So appraisals are just as long as, like I mentioned before, as long as the roof is not tanking, or as long as you have 2 to 5 years left on the roof, you should be fine. If there's no molds or anything like that, you should be fine. Appraisal, the number on the appraisal is not based on FHA or conventional. It's just off of the sale in the area from 3 to 6 months.
Gotcha. And the appraiser's typically not even probably going to know what loan you would be working with.
Well, they kind of do. I'm glad you brought that up. So yes, we have to kind of disclose, because then that's where the circumstances come into place. How old is a roof? If there's any mold, or if there's any issues on the fuchsia outside of the roof and things like that. So, but the price and the value of the home is not determined just because it's FHA or conventional. It's just sales in the area.
Just certain things need to be looked at differently if it's an FHA or conventional loan.
Yes.
Okay, so what would those guidelines for an FHA be?
So again, the property has to be livable, right? If there is appliances that are missing, if there is AC unit that's missing, if the roof is about to collapse, or if there is an electrical box that needs to be fixed, those things need to be fixed prior to you moving into that home. Gotcha. And it's not, also to clarify that, it's not because it's FHA, it's because it's a primary status home. FHA typically is only for primary status. Right. And conventional, if you were to get into conventional as a primary status, those things would apply as well, because a house has to be livable.
And just to clarify, primary status would be, this is a house I'm buying to live in as my primary home. Correct. This is where I'm going to spend most of my time.
Correct.
Right.
Correct.
Gotcha.
Yeah. You can't have a house without an AC in Florida.
No. That's, yeah.
Could you imagine?
No, I could not. I used to have a car that didn't have AC, and that was. Oh,
did you ever roll down the windows like Ace Ventura?
Yeah, it was a 1996 Sentra, and the windows were automatic, but then they broke, so they only stayed down, and I had to use a twig to keep it up because it also rains in Florida, so you can't have your windows down. You gotta send me a picture of that one. As far as we just spoke about the guidelines. What about, I know in the last episode with Rachel, you guys spoke about FHA and the type of home that you have to, be in. So what type of properties are restricted with an FHA loan?
Yeah, great question. So condos. There's absolutely not one condominium in the state of Florida. Well, absolutely not one, but maybe one or two that are approved by FHA. Mm-hmm. Okay. And the reason why is because condominiums are a huge risk factor in Florida. Sometimes it requires significant amount of reserves, or the insurance policy has to be in place for the building, or there can be a huge investor or homeowner ratio into that building. So if there's 10 units, 5 units can be investors and 5 units can be homeowners,
Right.
but it can be 7/3 ratio. Okay.
Got it.
So therefore, FHAs are just a huge, big no-no on condos.
Got it.
Okay.
So it makes it
Yeah.
a lot more difficult
Yeah.
for that process.
Correct. Budget wise. And it becomes a huge risk factor for the lenders too as well. So this is why, especially the collapse in Miami that happened,
Right.
there's a lender just looks at condos right away and is just like alert,
Especially
here.
closer to the beach.
Absolutely.
Yeah.
Absolutely.
Rates on FHA, because that's obviously everybody's,
Yeah.
biggest concern is always rates. So
Yeah.
what do those look like for an FHA?
So right now, the rates on FHA and conventional are kind of the similar. They're not too far apart. However, FHA is just about a point less than conventional right now. But conventional can also be okay as well if you have a great credit score, the debt to income ratio is low. But the better the credit, it comes down to the same thing. The better the credit, the better the ratio factor is, the better the rate, period. That's it. It's not a huge difference right now between FHA or conventional, but that's the synopsis of how the mortgage is calculated.
Gotcha.
Sorry, the rate.
Got it. So, and I'm going to kind of backtrack back to condos.
Yeah.
Because I just thought about a story that I have that we could share here.
Tell me.
Just to kind of show how,
Okay.
dealing with condos and associations can kind of make things a little bit more
Yeah.
challenging. So one of my best friends is in the process of selling his home and buying a new home. Selling his home now, had an offer accepted, closing date set up and everything. And the association has not set their budget for 2023. So what that means is that they're requiring any new home buyers that are coming into the community to put 25% down.
Yeah.
So this person could not put 25% down, so they had to back out of the contract, which almost made him have to back out of his contract with the home he's purchasing.
Oh, gotcha.
So luckily they had somebody come in the 11th hour and offer with 25% down.
Oh, wow.
Even though they didn't know that they had to offer 25% down. So
Wow.
it was meant to be and things worked out. But it does,
Yeah.
present, dealing with condos and condo associations do present, challenges as well.
Yeah, because condos, they have their own
Guidelines.
homeowners
Yeah.
thing. They have their board members. And
Right.
sometimes if the board members to agree on the table to say, hey, I don't want to continue a flood policy, that can hinder for somebody else to come in and purchase that,
Right.
In this case, particularly a little bit off topic, is now that the condominium knows that they don't qualify for a lender to approve this condominium, it doesn't necessarily mean the buyer is not approved. It means that the condominium does not meet the guidelines.
Exactly.
So the 25% down payment, that's a different topic, and we'll discuss that in the future for the different type of loan products. That's called a non-QM loan. Okay, it's not a standard FHA or a conventional, but that's for another topic. We'll get into that.
Maybe we'll do that next week.
Yeah, definitely. We'll talk about that. That's a good one. So in this case, yes, things happen last minute in the transaction, unfortunately. That had nothing to do with FHA. It had nothing to do with conventional. It's just the building did not qualify.
Right.
And a tip to that is whether it's FHA or conventional, if somebody's getting into a condominium, you want to have the realtor reach out to the seller agent to say, hey, do you have this 10% in reserves? Do you have insurance policies in place? And you want to get that information from the seller ahead of time so that your buyer is ready.
Right.
So they know ahead of time.
Gotcha. Well,
Yeah.
That's really all the questions that I have regarding any misconceptions. But I do have one more question for you. If in your opinion, what would be the ideal candidate for an FHA loan? Let's say somebody's looking for a home now and they don't know whether to go FHA or conventional, or a different route.
Yeah.
Who would you say would be a good candidate for an FHA type of loan?
There is no good or bad candidate when it comes to FHA. It's whether you qualify or not. What
Okay.
fits best for you to qualify in what category, right? FHA now also has increased their county loan limit. That has given people leverage to still qualify within the FHA threshold. So before, FHA had a certain loan limit and they had to go conventional, which means they had to work credit or something like that. But there is no good or bad. It's just a matter of what works best for you. Is the rate better an FHA while let's say you go under contract tomorrow, you want to start shopping tomorrow. The rate is better in FHA, or is the mortgage insurance better in FHA? Is your credit score pretty good? Do you need to work on your credit score? So it's a wide range of what fits best for you,
Yeah.
And typically what I like to do is I like to put two and two comparables, whether you go conventional, this is what you're looking at. And if you go FHA, this is what you'll be looking at. And that gives them the option to say, okay, well, I'm going to go with conventional or FHA.
Right.
But, again, we do FHA loans with a credit score of 580 or above. And it's crazy because I'll tell you a story. I had this one client whatsoever. Her credit score was a 563.
Okay.
And she decided to add her mom on the loan. Okay. Now, because her mom had a better credit score, we were still able to qualify her as an FHA loan, even with a 563 credit score.
Mm-hmm.
Now, if you were, let's say, for example, if you're around 560 to 580 credit score, you would have to put a 10% down payment. Okay, you still qualify, but it comes with 10%. Right. If she was to go 580 or above, she could give 3.5% down payment.
Got it.
So what she decided to do was work a little bit on her credit. Within a month, she called me back. She's like, Sunny, I'm ready to go. My credit's a little bit higher now. She was able to put 3.5% down, and she's shopping.
Nice.
So it's whatever fits best for you at the moment.
Got it. So best thing to do if you don't know is to call Sunny.
Yes, that's a key, right? Always get pre-approved first, Always have your numbers. Yeah, no. So just don't be intimidated for FHA loans. It's not bad at all. It's a very good loan product. There is no misconception on it. There is no miscommunication. I think it's just always to have our realtors and buyers educated on this loan product. And the key factor is you have to have a good loan officer that knows what they're doing, which is me.
Dot their I's, cross
their
T's.
Yep. Exactly. So, guys, that's the end of it. Thank you so much for tuning in. Thank you, Kevin, as always. Yes.
Thank you for having me.
Yes. If you want more information, click the link on my bio. Look out for my YouTube channel, podcast. And if you have any questions that you'd like to have answered, please send me a DM or send me a text. All my information's on the link on the bio. This is Sunny Fonseca with Mortgages with Sunny and Kevin, my producer. Have a great day.